First guest this morning, Phil Streible joins us, the Chief Market Strategist at Blue Line Futures. Phil, good morning. Thanks for giving us part of yours. I want to talk crude first. I just had a look at some of the data due out this morning, which I'd imagine energy traders are also going to be dialed in on. But this week we had a couple small draws in inventories. The U.S. dollar holding near January lows, crude holding near the highs of the year. Should we be looking to the U.S. dollar for the next potential catalyst here, or is there something else you've got your eye on?
Well, we're still keeping an eye on those inventories. Crude oil, though, range bound. I mean, if you pull up a daily chart, 62 to 67, that's where we've been. Total inventories, they did drop below the 5-year average. So currently we have 484 million barrels versus that 5-year average is 491. So, you know, the tightness in inventories has really what has pushed it up. Also, the talk that Iran, those sanctions, those aren't going away anytime soon. So we saw oil get that lift from that. If we start talking about, you know, Iranian sanctions being lifted and then also inventories being boosted by OPEC, oil price will come back down, but really range bound at the moment. That dollar index, we're a little bit concerned that it might bounce up. And that might put some pressure. So when you come up to these top end of the ranges, you know, you want to trim some of your positions off.
Yeah, I like that. Selling on the way up, there's nothing to be ashamed of in terms of that. And especially when we're in a bit of a range bound, I like to trade with a trend environment to the upside, a core long position, and kind of get in and out of that core long position and trade around it within that range. And as you mentioned, we are at the upper extreme, and we've been honoring this 50-day moving average. You know, you also mentioned Iran. I wanted to get your thoughts on it because depending on who you ask, you get kind of a little bit of a different opinion as far as the impact that that's going to have if we see some of that oil hitting the market. I'm hearing even if it does, it may not be enough to keep up with some of the demand we're seeing or expecting to see from the summer driving season.
Yeah, 2 to 4 million barrels, that's what they're talking about. And again, when you're trimming positions, you know, 25 basis points of your core position, that's what you want to trim up and down, maintain that core position right around 2%. When you talk about gasoline, though, the interesting thing about gasoline, so that drawdown, the imbalance between, you know, supply and demand out there, it's been going on longer than a month now. So we've got about 232 million barrels in supply. The 5-year average, 239. So we've been running tight. Now, if you look at the seasonal tendency, what happens is we draw down going into Memorial Day. We start to build inventories into Labor Day, and then we draw those down over, you know, the winter in the fall season. But this year, much steeper reduction in inventory. So I'm going to be surprised, or I wouldn't be surprised if we don't see the demand outstrip the supply as number of vaccines, as people are traveling. I mean, I've come down for the weekend down to Florida. It is packed. Yeah. There are, you know, traffic jams everywhere. So I think everyone else doing the same thing. Rather than traveling abroad, they're eating up those gasoline supplies out there. Yeah,
to speak to that point, I was on the road last weekend and actually went fishing for the weekend, and I couldn't believe how many people are out. I thought I was going to get ahead of the holiday traffic, but it seemed like, again, everybody's on the road here right now. We're certainly seeing that. I see that on a daily basis coming into the office. Let's talk about gold, because energy markets aren't the only commodities that have been bid and attracting attention. Gold this week up through the 1900 level. Even with this dollar hanging out near these lows, dollar didn't really open up the door to the downside. What did you see behind the bid?
Really interesting. I mean, gold has been bucking the trend. You look at a longer term time frame. I mean, on a short term, it's been rallying right from that 1680 low on up to 1900. The key there was that real yields, they had compressed again. So to get the real yields, you take the long-term yield, the treasury yield, you subtract the inflation rate. That's how you get real yields. So that has compressed, gone negative. However, I really think the upside on yields is going to be the biggest threat for gold. And I think that, you know, surprise boosts in a lot of economic data. Like, I don't think we're going to start losing jobs again. I mean, everywhere you go, you know, there's help wanted signs and things like that. So I think people will go back to work. So I think the real risk to gold is a shoot up on that real yield, and that could put some pressure on it. So again, you know, another interesting thing, gold coming up to just about unchanged on the year performance-wise. A lot of selling came in at that level, so people were trying to get even from the start of the year. So I'd be a little bit hesitant on gold. Stick with some call options, things like that. Look at the other base metals. They're performing better. Platinum, copper, silver, they've all done much better.
Quick look at a couple charts just to kind of provide some visuals in terms of what Phil was speaking to there. I've got the TNX and the candles here, and I've got, as you can see, we're looking at gold in the purple line. Phil was talking about this move up that we've recently seen off key support. And speaking of that move up off key support, here it is on the daily time frame, 1675. And here you can see again that coincided with the lows that we saw back in June this time last year. And then I just want to point out again, here you can see again the move up here on the daily time frame off those lows. But here's a good look at the run up that we've seen since the end of March. Here's an hourly time, more intermediate look. And again, the breach of the 1900 level. Phil, you mentioned some of the other metals to keep an eye on. I wanted to get your thoughts on copper, because while we've seen continued price increases as far as some of the housing data, it does seem like some of the trend that we've seen to the upside, or some of the momentum, I should say, maybe has been slowing some. We saw that in terms of some negative numbers as far as the housing data this week. Again, prices continue to rise, but maybe some of the demand has slowed.
Yeah, I wrote down a couple numbers when it comes to the housing. With houses above $1 million, those new home sales been up like over 200%. You go 750 to $1 million, it's like 191%. So the number of houses out there that are being sold is astronomical right now. And you go back to copper. I really like copper on this correction. I really think China was behind it. Chinese state planner had come out and said that they want to curb excess speculation in key commodities, and that yuan broke out on a multi-year basis. So the correction there, the strengthening of the yuan, allows them to buy a lot of key commodities and secure it. And by them coming out with that statement, we saw that correction directly hit that copper market. But I think copper might have hit a small temporary pullback. We like copper to the upside. We've done some structured plays with some call options back for a rebound back up to about 481. So again, really like copper. That's one of my favorite metals.
Copper continues to hold above the 50-day moving average, and certainly one of the metals that we've been keeping an eye on in terms of the tie not only to U.S. economic conditions here, but also globally, as you mentioned. We were talking at the top of the show about U.S.-China relations, and even, I think it was earlier this week, we started the week off with the PBOC and some of the focus there on some of the hoarding, as they called it, excessive speculation tied to commodities, and how they were going to kind of crack down on some of that. So certainly something to keep an eye on there as well. Phil Streible, appreciate you joining us and giving us part of your Thursday morning, a busy morning that is, here on the TD Ameritrade Network. Phil Streible is joining us, the Chief Market Strategist at